Hi, welcome to this video day, which is on the 23rd of July. It's Tuesday. We're just going to be looking at some trade setups to look at for the remainder of the week. Now, in terms of all the trade setups we're going to look at, they all come from the COT Net Traders report. Now, regular viewers will know we consider it the most valuable tool in Forex trading, and it's totally free as well. Yet, very few traders look at it. If you do, it's a fantastic tool for tracking smart money. And what you'll gain in terms of an advantage by looking at the COT Net Traders report, if you combine it with your technicals, is you'll be alert to turning points before you see them on the technicals. And also, you'll have an idea of how far a trend might run. So you're not tempted to bank early in a big trend. It's a fantastic complement to anyone who is just a pure technical analyst, and it will really boost your profitability. Now, in terms of the report itself, we make reference to it all the time in terms of our weekly forecasts and also in individual videos that we do on currency pairs. Today, just want to show the weekly video we do in our member center, where we look at all the pairs and then decide which are the best in terms of COT trades, for want of a better phrase. Now, in terms of the report this week, it does point to some significant trend changes and also to trends continuing, so trends in motion to continue further. So there's some interesting setups on the report. Now, in terms of if you want to learn how to read the COT, it just takes a little bit of practice, and you'll soon get used to the movements between the two groups that we track. We track non-commercial speculators against commercial hedgers. Commercial hedgers are the smart money. When the divergence between the two groups becomes significantly large, we'll want to go normally with the commercials. We'll also watch for the two groups to swap over their positions or their views. That can be a very powerful signal or warning as well. Now, the key to using the COT Net Traders report is to be pretty selective. Not every divergence means something significant, which you'll see as I'm going through the video. But we're going to go and take a look at the video now. And in terms of decent divergences to look out for, there's some good ones and also some crossovers with the groups as well. So right, let's go and take a look at the video, but please do keep in mind when I'm giving my review, it is my review as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, as well as all our COT analysis, you can click on the link beneath this video and get live access to our member center. Right, let's go take a look at the report. Welcome to this video today, which is on the 23rd of July. It's Tuesday. Just give our latest review of the COT Net Traders position. Sorry, it's a bit late this week just due to the summer break. Now, in terms of the summer, don't expect much of a lull in the markets. There's plenty of good-looking positions in terms of risk to reward in our view, which we're going to look at. But in terms of this spreadsheet, obviously you can download it without my commentary on the link beneath this video, or sorry, above this video, my apologies. Now, in terms of just for anyone new watching, it is always foreign currency first on the COT. And in terms of the positions themselves, they are compiled last Tuesday, released on a Friday. So we need to keep the kind of week in arrears in mind when we're looking at the positions. Now, what we'll do, start with the first major AUD USD. We've got a mild net short position by the non-commercials, 2.7 to 1, shorts over longs, commercials 2.6 to 1, longs over shorts 5.2. I've been saying this divergence in favour of the commercials doesn't matter too much, just simply, well, to us, simply because the volatility has been pretty low, which it has, but it did point to a bit of a rally. That rally now, I think, is over. It's just a correction of oversold. We've gone short, stopped behind 71. If we snap this 20-day moving average down to chart lows and then probably down towards the 60 level as per the daily market update. Now, in terms of a position that does interest us, it's the GBP. And it's not a big divergence, but this divergence has been built up pretty quickly. Okay, non-commercials over the last few weeks have really added to shorts. They're 3.2 to 1, shorts over longs. Commercials 2.1 to 1, longs over shorts. Not a big divergence, but when you look at it visually, you can see how the commercials have really stepped up their buying. Specs have sold hard. And we're up at the 100,000 level now, which is similar to over here when the commercials pushed it off from 127 to 133, and they also bought this dip here and pushed it off. And they dropped down their hedges. They stepped them up again here into that base or support level, pushed it up from 125 to 132. They're now trying to defend this level again, the commercials. And sorry, put my cursor in the wrong place. They're pushing the pound up a bit. I just think, I've said it before, I just think the pound is just so soft. This divergence built up quickly. We're going to see the pound, base out and move higher. It's still pretty soft, though. Let me just bring up the chart. We have had Boris Johnson confirmed as the new UK Prime Minister. You see a little bit of weakness. I think people expected it. And, you're not seeing a big sell-off. 124 is the big level to look out for. Our stop 123.60. We're looking for a move up. If we just get above this 20-day moving average now, then I think we'll be going to the upside. We won't stop here at 128. There's too many shorts to be taken out on stop. We should run to 130, maybe 131.80, which is basically the last level that we had that push up to 132. So I think bearish news is kind of priced in. But I think with the pound, if you're trading it, certainly GBP USD, trade it with small position size. You've got quite a skewed risk to reward in our view. Better opportunities in the crosses, which I'll come to in a moment. But a lot of people have said to me, no reason to buy the British pound at all. Everything's out now, bearish. Well, is that in the price? It's looking like it's getting priced in. Okay, pound, a little bit soft today, but no big deal. This one here interested us last week. The CAD, again, not a big divergence, but it's the size of the movement of the groups going against each other. You got nearly 12,000 long CAD positions, short USD coming in from the non-commercials, and 16,000 plus shorts coming in from the commercials. Again, this one is better when you look at it visually. You can see basically commercials pretty long here, push it up. They still maintain that long stance, but then they really get out of their longs, go short, specs cross against them, and it points to a turn. That is the first cross since March 2018, and on the last cross the commercials were proved to be right, and I think they're going to be proved to be right again. If we look at the chart, and the CAD, we've been saying it for a while, last few weeks it's the most overbought major currency, and we did push the USD down, but you can see the USD basing here, and now she's come up. So our aggressive short entry, a little bit of profit, we're hoping it's going to work. Okay. Also, what I quite like about it is a nice big fall. You can see this 20-day moving average hold the rally, and now that 20-day has snapped. So the CAD, the most overbought currency of all, and the commercials are selling it everywhere on all major currencies. So I think we could be in for some decent upside. So I'm really looking for 134 up to 135. For me, it looks a great risk to reward trade. You should see, I'm not sure I just said it, pullbacks to 131. That's where support should be. Okay, so bullish of the USD on the CAD, and we do like the fact the commercials really selling the CAD and buying the USD. Euro, never big divergences in this pair. We know it's got low volatility. These groups not really moving aggressively against each other for a while. But let's have a look at it. What I quite like is look at the commercials. They're literally now basically neutral. they were quite long. Okay, neutral, specs were short, they're coming into neutral. I've got a feeling when we see the next data, these groups will have crossed. Okay, and yeah, for us, did a video at the weekend, euro just out and out bearish, and yeah, it's fallen quite nicely since the weekend. Yeah, you got to take out this level here, which is 111.08 if you took these two tails, but I'd say 110.80, and then she'll be going, yeah, to the downside. I'm looking for 108, 104.50, then 100. Yeah, in the video at the weekend, it said nothing good going on in Eurozone, and there isn't. And yeah, they're going to do stimulus, they're going to cut rates. Everything is going wrong in the economy. It's just not a good time for the zone, and the ECB cannot turn it around. So in at 113.60 still as per the daily market update, and we're now down at 111.66. So yeah, some decent profit, couple of hundred pips nearly. So hoping this one continues the downside. Also, I've said it before that basically rallies are going to be limited. Okay, yeah, I just see this level here, yeah, about 112.80, the 20-day moving average, holding any rallies, because this spike up here, see the blue candle, that was on the Fed President Williams talking to the media, and the media he was saying that the US Fed were going to cut rates by 50 basis points this month. That was later corrected. Okay, and yet the euro can only manage a 70 pip rally, can't take out the 20, down, coming into the ECB. She's going to remain weak in our view. That 20-day moving average looks good resistance. Now, if we move to what we got next, JPY, we've got some selling of the JPY this week by non-commercials. Commercials are buying, not big divergence, 1.3 to 1 over here, 1.2 to 1 over here. But yeah, it's kind of a warning that the divergence really dropped down, that the USD may rally on the yen. Obviously, we're very bullish of the yen longer term, had decent trade out of it, but we can see it on COT base. You see this step up by the commercials there. They really push it off, yeah? Then they drop down their hedges. Now they're starting to add back in to longs. They've done some decent push-offs for the yen. As they push it up there, and they stepped up, and here as well, they're pretty long. They're coming back in longs now. If we look at it, just bring it up. If we look at it, obviously we caught this nice big move to the downside. On the rally, we've reshorted, but we brought our stop in pretty tight. Okay, so we're at 108.50 in, we're at 108.40 in the member center. So we'll lock in 10 pips profit for stopped out. But I think just a little bit weary the dollar could spring up maybe to the 109 level again. That'll be a big level. So if we're stopped out, we'll look to come off that 109 level. We've got a nice move down, bit of a retracement. Could come back up, so a little bit weary, but longer term, yen is going far higher in our view. I'm looking actually for if we come back through this 20 in the low to new lows, where are we going to go? 104.50, 100, could even go to 90 in my view. So over the last few weeks, we've been pretty decisive in our short positions in the yen and being confident. Now we're a little bit more weary, let's say. So we'll see how that one goes. Going back to the spreadsheet, CHF, still got the non-commercials pretty short, commercials pretty long, the CHF. And this is one I did say that I messed up. Let's look at it as USD CHF. Obviously up here we had a plus 10 divergence, which we would normally go for, in favour of the commercials favouring the Swissy over the USD. So obviously commercials expecting the dollar to go down. I thought we might correct to 1,000, so I didn't think it was worth going short. Look at that. bang, all the way down to 97. Totally messed it up. I did have some compensation because I was short the yen, but I should have seen this one coming and gone with it, because that's a really nice move. But again, I suppose you can't get them all, and I think I made a mistake on this pair. But the dollar's rallied back, and I think divergence now is just not wide enough to indicate more Swissy strength. I think it's had its run now. I personally think the USD is going to move back up, take out this 20-day moving average. I think she'll gravitate back to the highs, but certainly one that we missed. USD MXN or MXN here. This is actually a big divergence historically. 4.2 to 1 in terms of Mexican peso longs over shorts for non-commercials. 3.7 to 1 Mexican peso shorts over longs for commercials. 7.9. If we look at it on COT base, this is a choppy pair, but this one is going to rally. Obviously, the commercials, this was a record here, net long position. They're still not too far away from a record net long, and the commercials really short against them. I don't see the MXM pushing the USD down too much, and look at that for a choppy chart. But the size of divergence points to more USD upside. We're obviously long, not too far from current levels, held support. I know it's choppy, coming through the 20. We should easily gravitate up to here if we take into account previous big divergences like we've got now. In fact, if I bring the chart out, it points to move up to here. For a small position, I really like the look of it. 2050 is on the cards, but personally, this level, is obviously the close level. You can say it's the more realistic level if you're not that bullish of the USD. But I think the specs are going to get run on shorts, and we shall see some decent upside. Going back to, got to the wrong place. Going back, NZD. No real clues from the positions. Obviously mild net commercial long position, mild net short non-commercial position. 4.9. We did see some buying come in from the commercials. We did kind of expect a bit of a rally. The rally actually has run on a little bit more than I thought, but now I just feel the NZD is a great sell. Here she comes. That's a good short covering rally. Now she's on the way south. We're short, and just looking for this 20-day moving average to snap. We should go down towards the 64 level. So we'll see how that one pans out. Going back to the chart, what do we got? USD rub. This is again a choppy pair, let's say, but all the risks are to the upside for the USD. Non-commercials pretty long. This is in historical terms. Commercials pretty short, 5.6 divergence. You can see it on COT base. They've held this long position for a while. The commercials are obviously hedges. They're very short against them. I do feel that the USD rub is getting ready. So the speculators short the USD, long the rub. Low volatility. You're coming up to this 20. Just got a feeling we could go up towards this level here, or even this level here. So pretty bullish of the USD. Now, in terms of the next pair, what have we got? ZAR, no clues whatsoever, although it'll be a USD bull, but COT not telling us too much. AUD CAD. This is actually quite a big divergence, and we have been short of AUD CAD, generally for a good few months. And saying last week, we'll see how this rally goes. And basically what we've done, this is a nice move down. Our stop is at 92.50. So if she does flick up, we'll see what we do. If it's a strong move up, we might swing trade long. But longer term, AUD is going down on the CAD. But yeah, markets have to correct. This one has corrected a bit, might go higher. Stop, as per the cross rate section, is tucked in to get a little bit of profit out of it. If we do get stopped out, then we can reassess. But the big trend is down. Commercials just really warning of a little bit of respite to the upside. Now, in terms of AUD CHF, no clues whatsoever. AUD JPY, no clues in the divergences. AUD NZD, none. These two, they interested us last week. They interest us this week. CAD CHF, really good divergence. CAD, commercials selling it everywhere. 4.5 to 1. Longs over shorts from non-commercials, 4.2 to 1. Shorts over longs from commercials, 8.6. Did I just say it? This divergence has built up really quickly. And I like the look of it. And it's actually turned out to be a decent trade. I put it in a full video on the CAD, which I will update actually. I think the video I did, was it last week? Losing track of time. Hold on. What we liked about it was you're obviously coming up towards this level where you were with the commercials selling hard. Okay. You get the poke through the level, through the 76 round number. Can't get through here. And look at it. She comes down. Poke. Can't take out that tail. Red. Poke blue. Still can't take out tail. Another attempt. Red. 20 gives way. So far, decent trade coming off that 76 level. And I think we should come down to recent lows. Maybe even all the way back to here. So that one's worked out quite nicely. CAD JPY, a smaller divergence, but again, it's built up pretty quick, and it's the same kind of scenario for us. Tries to get through this 83 level, lots of tails, can't get clear. Now we snap the 20-day moving average. Down to chart lows, then down to 70 in our view. Just so heavily bullish of the yen. But CAD, there's a few more sells we're going to look at as well. Now, in terms of what have we got next? CHF JPY, two safe havens together. Nothing doing in that pair in terms of divergence. Euro AUD, no real clues. This one here, Euro CAD, has built up pretty quickly to the commercials coming in long and non-commercials coming in short. I'm pretty bearish of the euro generally, but I just fancy the euro from a technical perspective to have a little bit of a move up on the CAD. And in terms of the member centre, we've just come in long. And sorry, didn't get the chart there. Yeah, you had this 151 zone, 151 area where the euro couldn't get up. Comes down, 20-day holds are coming back towards the 20. I think we get above that 20. You should see a decent short covering rally to 149, just above. Maybe even back to 151. CAD, most overbought of the major currencies. And I think in terms of the euro, yes, I am pretty bearish longer term. But here I just fancy it as a swing trade long, which is obviously, it's in the cross rate section, of course. CHF, this divergence has really come down, but this has been a great trend in terms of a CRT divergence catching it at the beginning, and you can see it here. Up here, you had a +10 divergence, which we always like, and literally a fantastic move to the downside. I featured it in my Euro video at the weekend as well. The Euro's got limited upside, a lot of downside. I know it's a bit oversold at the moment, but here should hold rallies, then 106, then 104. So this one's been a really good one. I know the divergence has come down, but in terms of Euro CHF, commercials are still bearish. Euro GBP, it's not a big divergence at all, but the commercials have come in short. They've switched to short. Speculators are long. It's a small divergence, but just from the perspective of the chart, I really like it. Did this in the video that I did at the weekend as well on the euro. if you look at it, you've got big zone over here. Okay, sort of all these candles here. Tried to force up, yeah? Outside of this outer bulge, back in. Now fighting to hold this 20-day moving average. We can't hold it today. It's going down to at least 87 in our view. Probably going to run on to 84. See the 20-day, how it's held support there, or provided support, near touch there, push off, and now we're struggling to hold it. We can't hold it, close beneath it. I think it's kind of lights out for the euro. I'm pretty bullish of the GBP though, and I've been sitting on a trade at 89.60 for a couple of weeks, and it's at 89.73. I'm hoping it's now going to break in my favour. 90.80 is the level we've got our stop at. Let's move back to the positions. Euro JPY. Surprised at this one, no clues at all, but yeah, heavily bearish as per our Euro video and the chart in the cross rate section. Euro MXN 10.1. Now, obviously USD MXN looks attractive, but yeah, let's say you're not a USD bull, you're a Euro bull. You could always do Euro MXN long, or you could do both, do them as a split trade. Yeah, then you're basically compensated if, let's say, the USD goes down or the euro goes down. The MXN is going to go down quicker in our view. MXN is extremely overbought. I won't go through all the fundamentals here, but it's going to get a hit in our view. And it's a bit similar to, I'll bring the chart out, a bit similar to the formation in USD MXN. What I quite like about it is you've got kind of low volatility. You touch the 20 there. I think get through that 20. Look at the volatility dropping. Points to a big move. That'll be to the upside. And I don't think we need too tight a stop either. Probably behind this tail here, which I think is exhaustion. So I know less a looked at pair, but it's a great COT divergence and well worth keeping an eye on. Euro NZD, no real clues from the positions, although I do think the euro could bounce on that one. GBP. This has become kind of a neutral position. Commercials have basically got out of their GBP shorts. I'm looking for the GBP, I'm sure regular viewers know, to have a decent rally. The standout one is GBP CAD, because the CAD is overbought everywhere. So if the GBP is going to rally, it should rally probably the best on the CAD, if I've got my view or analysis right. And I just like in the way we break lower and then look at it, we're just coming back up towards this 20-day moving average. Boris has won, the media's full of doom and gloom, yet the pound isn't taking out the lows. Coming a bit early on this one, coming in on this blue after getting stopped out with that red. But I'll add if we get above the 20-day moving average. And CAD is so overbought, pound so oversold. 170 is easily on the cards, and long term I think we could go to 174. Now, I think, yeah, for me, you're right or wrong on these sorts of trades. Obviously, you're picking a bottom. You've just got such low risk against your reward. It's like 5 to 1. And then the trades that I always like, if you're contrary to the majority, if you get it right, you're going to do really well. You've got to keep in mind you are against the majority, but 5 to 1, you can get, 4 trades wrong, 1 right, and break even. And say that quite often, but we're looking hopefully to have a better hit rate in this one going forward. We shall see, but really like the look of that setup. Where are we next? GBP CHF. GBP I think should bounce, across the board, but no clues from the positions. Although I did do a video the other day on GBP with the CHF in it, so you can go and check it out. It looks a really great technical setup. GBP JPY. Commercials are now mildly long. The commercials just got out of their shorts now. So again, you could go for GBP JPY. What about GBP MXN? 13.1. I know it's a lesser looked at pair, but you can see it here. Let's have a look at it. Look at what you got. You got one poke at the 20, another poke. Can't get through. Another poke nearly gets there. This tail here looks like exhaustion. Can't get through that tail. Working our way up again in low volatility. Points to a big move. Just through here. Looks good. And then I think we should gravitate back up to at least, 25.07. And you will not need a big stop on this one if she does break to the upside. Specs, well, they're just heavily short the GBP everywhere. So again, a lesser looked at pair if you like them. We do obviously one to keep your eye on. A really good COT divergence, and I think that is the biggest on the positions this week. And anything above 10 is normally a pretty good one to go for from a risk to reward point of view. GPNZD, no clues, but again, like I said, we're pretty bullish of the pound. NZD CAD, again, this is like AUD, NZD. We've been weary of a bounce. We've been short this one for a good while. And you do get this big fall. And obviously up here we had a plus 10 divergence that gave us the initial trade. And we managed to stay with it a good way down. Recently, just come back into it. Just don't think that level can get taken out 89. I think, natural short covering rally. The commercials have seen that. Gone long. Positions are from last Tuesday. I think they will have come out of some of their positions. Nice red candle today. I think we're going down to 83. The CAD is definitely the strongest of the commodity currencies going forward, which I've discussed in previous videos. But you always, like I said, get retracements. I think this one is a good sell. Going back to the report. NZD CHF, NZD JPY, no clues to the positions. I'm bearish of the NZD though. MXN JPY 10.4. I know a few people have been holding this for a while. It still looks pretty good. In terms of, you had that nice fall. Then you get the rally. This is the real confirmation, I think, we're going down. You might probably not be, or a lot of people might not be so interested in this pair. It is a longer term one. But look at these candles here. You can hardly see them. Just such low volatility. Looking for the yen to push the MXN down. Let's have a look at what we've got next. Euro rub. That's basically similar to USD rub. Euro ZAR. Not too big a divergence there, but you could look at it. GBP ZAR. I like this one. This is one of the minor ones that I think looks really good. Well, there's plenty of GBP pairs to pick. I'm liking the look of it. Kind of here, lowish volatility, kind of steadying up. Don't go just yet, but get through here I would. 1750 basically, because that 20 will sneak down, and then GBP hopefully, well, if GBP comes up, the 20 will sneak down, take it on the break, and then I'd look for a retracement of that decline. And in terms of GBP, it is contrary trading. I know a lot of people are not so into contrary trading, but I just love it because, like I said, your risk to reward is pretty good. So they're the positions this week. Not many big divergences in the majors, but there are a lot of clues in the positions, the way the groups are moving in terms of how the majors could move. And in the crosses, there's some nice opportunities as well. And for me, same as last week, really. I like the CAD as the most overbought currency to sell on the safe havens and the GBP. And the GBP, I fancy for a rally. I'm liking the way the euro, the way the commercials are just bailing out of longs. And they've been long for a good while of the euro. I think that's pretty ominous for the euro. I don't see much upside for the euro. We might get a bounce on the ECB. It might not be as bearish as people expect, but long term, euro going down. MXN, nice sell in our view as well. So that is the report for this week. We'll be back again next week. Thank you very much for watching me as usual. Take care. Have a good day.